Good morning, traders, and welcome to the Pirate Traders live stream. My name is Charles Goff. Today we're going to be focused on the ES and the NQ, mainly the S&P 500 futures here. That's going to be our focus, and we're going to be trying to figure out where the market is going to go and how we can enter trades based on the auction process. If you're new to the channel, please subscribe so that you can find out whenever we're going live. We kind of go live randomly. We don't necessarily do it every day. So if you want to be part of these live streams in the future, you got to smash that subscribe button. If you are watching with us live right now, please smash the thumbs up so that we can tell the algorithm to send some more people our way. All right. Well, interesting evening, wasn't it? So the market made an insane spike to the upside last night. And here's the thing. Yesterday at the close, we were talking about the fact that the market was positioned to make a move to the upside because of what we call a breakout of balance. So this is a balance area. It's a channel that the market was in, and we broke out of there. Yesterday, we came back and back tested the breakout, and by closing in the upper end, that was bullish and increased the odds that the market could go higher. But of course, we could not take a long trade because we didn't know what was going to happen with the Strait of Hormuz. We didn't know if Trump was going to decide to bomb or not. Well, a ceasefire for 2 weeks is what ended up happening, and as a result, the market made a 200-point move to the upside. So this is not a nothing move. This is a big change in the market. So if we're looking at just the ES, that's a almost 3% move that it made in one swoop. And if we look at the oil prices, the crude oil, that was a 16% move it made to the downside. That is a massive, humongous change based on one little piece of news. Considering the fact that the news was not the war is over, the news was ships can pass through the Strait of Hormuz for 2 weeks. So are the oil companies that pump oil in the Middle East that had shut down their factories going to be able to boot back up and start making more oil? Of course not. Right? Those facilities are going to stay shut down because it's not worth it to boot them back up for just a couple of weeks. So this really isn't that big of a change, right? It's basically just saying nothing's going to happen right now. It's just basically saying nothing's going to happen for the next 2 weeks. So why is the oil market crashing so hard and the stock market pumping so hard? Why are we getting such an explosive reaction to this? And that is what we call momentum. There's a lot of bots nowadays that trade purely based off of momentum. So if they see huge flows moving to the upside, they will join them until they see that those flows run out. And now that the opening bell just rang and the market is open, it's time for us to find out if those flows are going to run out. Are traders going to wake up this morning and actually feel bullish and actually want to exit their shorts and enter new longs? That is what we're waiting to find out right now. And this seems like an oversimplification, but I promise you this is going to be the best advice that I can give you for trading the market today. Very simply, the opening price is 68.30. If we're above it, we're bullish. If we're below it, we're bearish. It really is that simple. Now, we could get a gap and chop here. A lot of times when the market does some sort of extreme move in the overnight, the market will need to spend an hour or two kind of going nowhere, just, crossing through that opening price again and again and again and again, as a way to allow market participants to digest the information and choose what they're going to do next. So that is certainly possible this morning that we could just get a gap and chop. But if we are starting to build momentum below the opening price, that is bearish, that this market wants to retrace this gap. Okay. If we start to build momentum above that opening price, that is bullish, that we have more momentum and that this thing is going to keep going to the upside. So as much as it seems like an oversimplification, I really do see it as bullish above the open, bearish below it. And I'm waiting for resistance below to be a signal to look for shorts, or support above to be a signal to look for longs. Now, the next question you're asking yourself is, okay, Charles, the market is open. We're below the opening price. I'm shorting the market because, we're bearish below the opening price. Where do I take profits on my short? The simple answer is normally I would say, wait for the gap fill, but that is not going to happen today. We are not going to get a gap fill today. This is too big of a change all at once. So there's no way, even if we sell off all day, I think about as far as we could go is maybe, 6,700. I don't really think we could go all the way back to yesterday's range today. So if you are looking to trade the gap down, it is worth trailing your stop as the market works its way lower and considering taking profits at a large cumulative node of volume. There's a really important reason why we stay focused on these large cumulative nodes of volume, because these are areas where the market had support and resistance in the past. And often, if the market is hunting for a support or resistance level, it'll just do it where it was in the past. So the best place to figure out where to lock in profits if you're short, or where to enter a short if we're pushing back up into resistance, is going to be to use these large cumulative nodes. And you can see that on the left side of the chart. That is these orange nodes. And what you will find is the market can move through the low volume nodes very quickly and will find support and resistance on the larger ones. So if we start to get resistance here, a move down towards, 6,800 could happen very quickly. Then we would get a little support. And if we got new selling, the move down to, 68.89 could be very quick. Then we're going to get a little support, and so on and so forth. So this cumulative volume is going to be my focus this morning for hunting for those, support and resistance levels. It is also worth noting, on the way down, we left behind a ton of weakness. You can see we had single prints, we had weak references, we had poor highs, we had all sorts of weakness that we had left behind on the way down. This is all repaired now, all of this. So we're going to have to use cumulative volume to figure out where that support and resistance might be. Okay? So you're going to see me go through here and delete all this right now. Bye, bye, bye. You are not weak no more. We don't need to pay attention to the floor. So suffice to say, we just cleaned everything up and created one giant gap. Okay, so here's our moment of truth. We're trying to find out, is this going to be a gap and chop? Are we going to keep crossing through the opening price over and over again? Or is this market trying to get momentum down? What we'll call a gap fill, even though we don't think they'll fill the gap today. And so we're watching this area right here around 68.28 for resistance. If that holds, we're looking for that next move to the downside. If it doesn't, we'll cross through the opening price, and that will give us gap and chop. Okay? So right now, can they hold it? If you have not voted yet, please let us know in the survey. Where do you think the market is going to go today? You don't have to be right. It's completely anonymous. We won't know what you voted, but I am curious of your opinion. Do you think we're just going to kind of chop around in the range here between 6,800 and 6,850 and probably close inside that range? Do you think the market is going to make a move to the upside today and close much higher than we opened? Or do you think we're going to sell off and get back down below 6,800 and close down there? Which do you think is going to happen? Let us know in the survey. Okay, so we are seeing some resistance here. That's bearish to see. We're now looking for follow through. Can they cross back through 68.20? Okay, there's that follow through. So I am now bearish. Now I have to give you a little caveat here as I put up this bearish banner. Okay, I am only bearish as long as we stay below the opening price. As I said, if we cross through that opening price, then I'm not bearish anymore. Okay, bearish below the open, bullish above it. So if we cross through it, what I'm assuming is we're just going to chop for a while. We're just going to go sideways. But as long as we stay below it now, the sellers just took control of the market. So as long as we stay below that opening price, the odds are that we're going to head lower. So I'll be bearish as long as we stay below it, but willing to change my mind quick if we randomly pop back up and cross through, which could, of course, happen at any moment. And you might say, well, Charles, why do you even have to have a bias right now? Why not just say, let's give the market an hour or two, let it figure out what it's going to do, and then you look for trades later on in the afternoon. There's nothing wrong with that, right? There's no reason why you have to enter a trade right now at the moment the market is trying to digest, last night's move. But the thing is, you can get short right now with a 10-point stop, with your stop above that opening price. And this, market could easily move 100 points to the downside. So that's how you have to think about risk in these moments. You may not feel confident. You may not feel certain the trade is going to work, but the risk reward is only going to be great at this moment right now. If you wait, an hour or two when the market's already made a move to the downside, sure, it could keep going. It could keep going all day, but you just won't have as good a risk reward. So that's what you're trading off here. You're saying, would I rather get in where the opportunity is really good, but a little bit uncertain? Or would I rather wait till I've, certainty, but then the opportunity isn't as good? That's the way you got to think about trading. Tom in the house, good morning to you. He says, well, the wave in the email looks like about the right size. Yes. So I made reference to the Laird Hamilton style big wave surfing. That is how this feels to me. So just imagine the idea that normally you just surf regular size waves, maybe 10 feet tall, but then all of a sudden there's, an earthquake in Japan or something. And now there's a huge set of waves coming to the West Coast, and you can go out there and you can surf on a 50-foot tall wave. You know what I mean? Would that be exciting to you, or would that be terrifying to you? Right? If you would be excited by that idea, then as a trader, today is a day to trade. Like I said, we could easily make a 100-point move. So today's a great day to be entering trades if you like the risk of those big waves. But if you don't, today's a great day to stay on the beach. It's super dangerous out there. So if you don't want to risk it, just sit back and enjoy the show. There's nothing wrong with that. Good morning to Rich. TY in the house. He says they should have a like button where the chat is. Having to close the chat on mobile to see the like button is wild. I agree. What up with that? What up with that? But thank you for putting in the effort and smashing that thumbs up button. That really helps out the channel, pushing this to new viewers. So again, I'm using cumulative volume as a way to look for support or resistance levels. If I'm thinking, okay, the market has momentum down right now, where might the buyers step in? The nearest level that jumps out at me is this cumulative node right here around 68.05. The next one is this cumulative node right here around 67.98. So that's where, if there are buyers waiting to buy the dip, those are the areas they'll probably step in. Okay? So that's where we'll be looking for support. All right, let's close out the survey and let's see what you guys think. Drum roll. Brrr. Oh, wow. That is not helpful at all, guys. 35% of you think we're closing in between 6,800 and 6,850. 33% of you think we're going higher. And 20% of you think we're going lower. 12% of you just don't even want to guess. That is totally unhelpful. Chat. Silver Media in the house. Good morning to you. Chester is here. Welcome, welcome. Pat is here. He says, first day, very excited. Well, we're happy to have you, Pat. I always make sure to mention to those that are new to the brigade, if anything I say doesn't make sense, if you're confused by it, if I say, we're looking for support at the B period high, and you're like, what's a B period high? Just ask lots of questions, okay? I'm happy to answer your questions. I often forget to explain things because, I kind of assume everybody already knows it. But if there's anything you don't understand, just ask away. And it is always best to ask your questions in the first hour of the day because that's when I'm interacting with the chat. Frito says, if I had a nickel for everything wrong with the YouTube platform and the apps and through the browser, it's like they invent ways to ruin the platform. I think they experiment. Google has very much that move fast and break things sort of mentality. So they roll things out and then people complain and then they fix it. They're sometimes slow with the fixing, but they're good about it. Will is here. Good morning to you. Mark in the house. Welcome, welcome. Exploring CME is here. He says, happy momentum trading. Speaking of the momentum, the ticks are not able to get back to the zero line. So that is showing us that buyers are trying to buy this dip. But we're still bearish as long as we remain below the opening price. So we're looking for this resistance at 68.25 to hold, and those ticks get smacked down once again. If they don't, and the market crosses through the opening price, then we have momentum up. Dun dun. Dun dun. Dun 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 dun. Sellers holding on by the skin of their teeth. Dun 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 dun. Dun 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 dun. Dope Angel says, don't say never. A Trump tweet could get us a gap fill. That is true. It's an excellent point, but I just don't think so. The market went too far, too fast to the upside. So I'd say getting about half the gap filled is probably the most we'll get. But first, they got to hold this resistance, and I do mean right now. Boop. Okay, we still got that iceberg up there, so they need another poke into 68.29. The sellers are dancing right on a razor's edge. Willie T says, how many days is your cumulative volume profile? So right now I have it set at something ridiculous, like 300 days. But the way I always think about it is just how far back do you have to go to find out how much volume traded at this level, like total. So right now you would need your cumulative volume to go back to, October, November of last year in order to see where was the volume when we were in here. Where was the volume when we were in here? What about in here? What about in here? What about in here? Where was the support and resistance during these times? That's what will help you figure out where the support or resistance will be right now. Whereas when we were down here, we needed to go all the way back to like August of last year to see where the volume was back then. So I just kind of always leave mine set at like 300 days, which generally tends to be enough. Ghost Trader in the house. Ooh, good morning to you. 7-7 Athletic is here. Good to see you. Willie says, at this rate, in another 2 days or less, we could have all-time highs again. I really doubt it. Again, if this was an actual announcement of peace You know what I mean? If it was like, we've come to a peace agreement, these are the terms for why Iran can never have a nuclear bomb, blah, blah, blah. If it was something like that, I'd be like, yeah, this could end up being enough momentum to take us to all-time highs in the next couple of days. But that's not real, right? All this is a 2-week break. It's just no shocking news for the next 2 weeks. And that to me is not enough to get us to all-time highs. At least not quickly. Auntie in the house. She says these points on the chart that you deleted are due to the fact that we opened above all those points this morning. Yes. So anytime you have a weak reference, the only way you can get rid of it. So for example, we have a poor high at 68.52. That's been there since March 10th. Why do I still pay attention to it? Why is it still there? Because until the regular trading hours come and cross through that level, it is technically still a magnet. And I know that's kind of hard to imagine, but it is true. If we'd have gotten a gap and go today, there was a very real chance we would have pushed up, got above the overnight high, got above that poor high, and then come and crapped right back down purely because of that poor high. Even though it was, a month ago, it could still have that effect. So anytime we have a weak or poor reference or set of single prints or spike that has not been crossed through in the regular trading hours, it remains there. A gap counts as crossing through. So for example, if there was a weak reference right here, that would still be weak because the overnight crossed through, but the regular trading hours didn't. But anything below us has been passed through at this point. So yeah, all those weak references disappear. They're no longer magnets. And so now we have to look for, where did the market do business in the past? That's where it's likely to do business now. Speaking of which, we're looking for a bounce here around 68.05. At this point, the ticks have been able to get back to the zero line. So when we opened this morning, obviously, the ticks were significantly overbought because the moment the opening bell rang, the market was way higher than yesterday. Every single stock was up. So those ticks started the day overbought. The fact that we came back to the zero line just now tells us that that imbalance has evened itself out. Okay. So from here, we get a better idea of, are buyers going to step in today and keep this market going up, or do we need to keep heading down and filling that gap? So we're at a support level where that buying might take place, and we're going to watch the ticks to see if it does. If we get a bounce in price and the ticks start to bounce off the zero line, well, then we don't want to be bearish anymore. If we don't get the bounce, the momentum to the downside continues. If you are not taking profits here because you want to stay in this trade for longer and you did get short up here near the opening price, this would be a good moment to go ahead and move your stop below your entry. Okay? Because if we do get support here, if we do get the bounce on the ticks and the price action, we'll come right back through the opening price. So if you're short, you can move your stop a tick below your entry, stay in it in case we keep going, but at least be protected if we get the bounce. There would also be nothing wrong with taking profits on a short here, waiting for a bounce, and then re-entering that short at resistance. Again, if you wanted to lock in those profits. This is the thing about trading. It's a constant measurement in our mind for what would I rather do? What works better for me? Am I better off locking in profits and waiting for a bounce to get short again, and then maybe I miss it and it just keeps going without me? Or am I better off moving my stop below my entry and then staying in it if it keeps going down, but if it comes back up, maybe it stops me out? And this is all just personal psychology. I teach all of this in detail in my Mastery of Markets and Minds workshop. If you guys are interested in learning more about that, just head to marketsandmind.com. There's a link in the description as well if you'd rather just click that link. But this is a 2-week workshop that I teach. It's 4-hour lessons, 5 days a week, so 10 lessons in total. And you don't have to watch them live. You can watch replay videos if you have to work or whatever and you can't watch them live. But I teach everything about trading. I teach how to read the chart, how to figure out where the market's going to go next, of course, right? That's the auction process. But I also teach you how to hone your intuition, how to get better and better at being able to make those predictions over time through gaining experience and knowledge. And you have to have perfect practice to get perfect results. You have to know how to hone that intuition. What is the process you have to go through as a trader to get there? I hope you understand the importance not just of being able to read the market, but understanding yourself. Like I said, for one trader, the right move was to get short up here and lock in profits right now. For the other, it was to get short up here and move your stop below your entry right now. If you don't know which fits your personality better, you may be struggling as a trader. You may be losing money. You may be break even and you can't figure it out and you're frustrated and you're like, why can't this just work? I've been doing this for years. I should have this figured out right now. Well, you just haven't asked yourself the question, what are my personal strengths and weaknesses? Which will drive me crazier if it were to not work out, right? Let's say you took profits right now and then the market just kept selling off. Is that going to drive you crazier than if you moved your stop, the market comes out and stops you out, and then it goes lower, right? There's always a potential where you could do something and it might not work out. What is going to have the bigger frustration for you? What is going to have the bigger effect on the next trade you take? If you can learn to develop a strategy that is custom tailored to your psychology, to what works or doesn't work for you, you will end up improving your results dramatically. And most people just don't even know how to go on this journey of self-discovery. Well, that's what the workshop is for. I'm going to walk you through. Again, we're talking in total 20 hours of lessons. It takes that long to teach all of this. This is not something I can explain really quickly in a live stream. We go very, very in depth to cover how you learn not only your market understanding, but your self-understanding. We also teach you how to think in probabilities. That is essentially you stop being the gambler, which is what most people are, and you become the casino, right? You only trade when the probabilities are in your favor. And you don't have any emotional attachment to trades working or not working. Your attachment is just to your ability to follow your rules. Okay. And then lastly, we talk about managing risk. Managing risk is allowing you to guarantee that you won't blow up your account, that you will at least be able to keep trading tomorrow and the next day and the next day so that you can put in the time and the effort to actually get good enough to start getting consistent profits. Because if you're losing too much money, you're going to end up quitting. And so you've got to understand how to manage your risk. You want to manage your risk in a way that you protect yourself, but that you don't limit your rewards, right? That's what we're talking about with the move your stop below your entry. By getting short up here and moving your stop right now, you're protecting yourself from a loss while potentially being able to be in the trade if it does go 100 points to the downside. This is risk management. And again, this is the reason why so many traders quit, because they just don't put in enough practice time. They don't gain enough experience because they lose too much money too quickly, or they start managing risk in a way where they miss out on making the money, where all they're doing is taking quick little scalp trades, making a few bucks here and there, and they never really feel like they're gaining momentum in their success. So I teach all of this in detail and more in the Mastery of Markets and Minds workshop. I'd love for you to join. It's 2 months away. But if you sign up right now using promo code FIRST up until midnight on Friday, you get an extra 15% off. So no matter what, if you sign up in the next month, it's $75 off. You don't have to have any promo code for that. But if you use promo code FIRST this week, you get an extra 15% off. It'll never be cheaper than that. And, you know, the course doesn't happen for another 54 days. And if you change your mind between now and then, you can ask for a refund. So up until the 30th up until May 30th. You can request a refund. Just shoot me an email and I'll send you your money back. Okay. So if you're thinking about doing this, if you're saying to yourself, I really need to invest in my education. I really need to gain the knowledge that will help me progress as a trader. So I stop, just treading water and wasting time and going sideways. Well, then you should consider signing up this week. Lock in that discount. We'd love to have you. If you go to the website, you'll see lots of reviews from people that took it in the past that describe, what the experience was like for them. I'll teach you how to use Market Profile, Bookmap, Market Internals, and GEX levels via Spot Gamma. Speaking of which, let's take a look at Spot Gamma. This morning we had very positive gamma, which meant we were more likely to be sort of pinned today. Let's see if that changed after market open. It did not. So it's less purple than it was, but this is still very blue. So this tells us that we're more likely to have sort of a choppy day than necessarily a big, strong trend day when the gamma is blue like this. And let's take a look at delta pressure. Yeah, so same thing with delta pressure. When you blue below, that's support. When you've red above, that's resistance. So again, this is implying more of a choppy sideways day than necessarily an all-day trend in one direction. So we're going to just have to take this market one tick at a time, y'all. It is what it is. River Rock in the house. He says, Charles, what do you see as a possible low today? They can't even get it under 19. So this is all about momentum, right? So bigger picture, right? The momentum is up. If we're talking about on a daily time frame, the momentum is up. But right now, as long as we're below the opening price, the intraday momentum is down. Okay. So if we can keep that momentum going, the market can go, I think probably, I guess I'll just go ahead and zoom out here. The most obvious target to the downside is this large cumulative node right here. So 67.70 is a very reasonable potential low for the day if we can keep the momentum going down. Okay. We did step one, right? We got the first move, but we also just got a bounce at the very first support level. We also got the bounce in the ticks as well. So the momentum might already be over. Now we're back into testing resistance to find out if it's over or not. And if it's not, then we just made the low of the day because we'll cross back through that opening price. So I can't predict ahead of time where the market's going to run out of steam. I can just take it one step at a time. From the open, what's the first momentum? Where's the first potential support? Okay, once we get there, we start over. We're at support. What happens next? Do we get the bounce in the ticks? Do we get the bounce in the price? We got that. So now we're saying, okay, if we got the bounce in the ticks and we got the bounce in the price, where's the resistance? Does that resistance hold? And if that holds, then we're like, okay, what's the next support? And then it pushes down into that one. And then we go, okay, can that hold or is it going to reverse? And we just take it one step at a time. And the reason that I trade like this is not, on accident. This is very intentional because of something called confirmation bias. When you start to make a plan for what you think the market is going to do today, before it starts to do anything, then your brain will intentionally hide information from you. You'll see the bounce in the ticks, but you'll go, well, yeah, it bounced, but who cares? It's still going to flush and come lower, which it could. It absolutely could. But you don't want to feel confident that that's going to happen because then your brain will hide that information from you. So you want to be open to whatever the market is doing, step by step by step. Now, as we said, market understanding is knowing what those steps are. From an open, what is it supposed to do next? Where is the support? Where is the resistance? What should it look like to see that support or resistance hold? You got to have a market understanding to get to the point where you recognize all these things. But once you can, the most important thing is not forcing your way into a bias. Remaining open to the possibility of anything happening at any moment based on the market generated information at that particular moment. Now, you won't be right 100% of the time. Nobody is. But I guarantee you, you will be right more than you will be wrong. If you just take it one step at a time and you follow the process, the auction process. The first move was down. We found buyers. Do the buyers reverse us or do we get a next leg down? So on and so forth. If you just follow that auction process, are there more sellers' hands going up in the air right now or more buyers? Then you will be right more than you'll be wrong. If you combine that with good risk management, you will be profitable. And it sounds very simple to say out loud, but it takes years of practice and discipline to master this as a skill. Once you master it as a skill, becoming a professional trader is inevitable. Okay? Because there's no job better than this once you master those skills. The skill of managing the market and the skill of managing your own psychology and your approach to your trades. marketsandmind.com. Okay, so the market just created what we call a poor low. It is poor because the B period reversed just one letter away from the A period low. And that's important because that creates a magnet for price down there. The market is basically saying, you know, if you come back down here, there'll be stops that you can take out. Those buyers that just went long at the B period low, their stops are down there. So you often get a push away from a poor low. So you get a bounce, but then the market finds resistance and comes back through it. So that is bearish to see. And again, this is one of the many things that is counterintuitive. You think, but Charles, the poor low means the market is going to go up. It's going to push away. How is that bearish? Because it's going to come back. That's why it's bearish. Because once it finds resistance, it'll come back through that low. Joe says, this proves the theory that you never take out long-term on fear. Sucks for people who got scared and pulled out of their 401ks and or stopped adding in. Yes. I forget the exact statistics, but they went back like 20 years and looked at the stats, and it was like, again, I'm just making up the numbers. I don't remember exactly what it was, but it was something like 70% of the move that the stock market had made was on like, 5% of the days or whatever. Like, it's just like when it comes to the moves up, they happen so fast that if you're not in it, you miss that move. And so if you're talking about long-term investing, you gotta, stay in it. Or I actually have a system for long-term investing called Consensio, in which case, if you were in that, you would still be holding about 50% of your portfolio, but you'd be about 50% in cash right now. But that's just an entirely different system. And that is definitely not short-term trading. Rivervox says, close between 6,800 and 6,850, methinks. We shall see. Trevor in the house, good morning to you. TSV, welcome, welcome. Crypto Rider in the house. Malcolm says, ask lots of questions because those of us who have been here for a while, we forgot what we know. That's so true. That is so true. Just the other day, probably like 2 weeks ago, I suddenly realized I was not marking volume, virgin points of control. Like I just stopped using virgin points of control for like 2 months, and they're like unbelievably good targets for trades. And I just kind of forgotten to mark it on my chart. And when I don't see it on my chart, I forget about it. You know what I mean? That happens. So Exploring CME says, can we take a look at Spot Gamma? Yeah. So the way I'm reading Spot Gamma right now, it's saying sideways day. But of course, if this market starts to break lower, if we repair that poor low, well, then that might change, right? People will start buying puts. Pat says, do you have a Discord channel? Yes. So if you're interested in hanging out with me every day like this, you got to join the Pirate Traders Brigade. There's a link in the bottom of the page. It's piratetraders.io/join. And costs $20 a month. We got a Discord. I don't really spend much time there, but we have one. And I do these live streams every day, just like this. Riverrock says, how many offered at 68.40? So 68.40 doesn't matter to me. The opening price does. This is where it's at. So I'm focused on resistance below the opening price. Crossing through that opening price, orders that are up there right now will spoof. They will disappear. They don't matter. What matters right now is, do traders get short here? We'll see that in the ticks. And right now we're seeing tug of war. But we got a poor low. We got momentum to the downside. So the higher probability is that we're heading to 68.05. Just not fast. Just not quickly. And probably not without poking into 68.21 first. He says, so is that a magnet now? Yes. The moment you create the poor low, it's a magnet. And again, I know it's confusing to say first it goes away, it pushes away, then it comes back. I get that that's confusing, but that's what makes it such a great edge. So if you're short the market and you see a poor low, that's a reason to go ahead and lock in your profits real quick, right? Or not get stopped out if it pushes back up into resistance, right? To stay confident, to stay in your short and wait for it to come back. If you're flat, it's a reason to wait for a bounce. Don't short the low because you know it's going to bounce as a push away, but then feel confident entering a short at resistance because it's likely to come back. And then you say to me, okay, Charles, how often does a poor low get repaired that same day? The answer is roughly 60 to 70% of the time. And so then you say, wait a minute, 70% of the time? That means 3 out of 10 times you create a poor low and you just fucking keep going and you never come back for it. Yeah. Welcome to trading. Everything is always probabilities. There's never a guarantee. But if the probabilities are in your favor and they give you a way to execute trades, well, then that's something you want to use in your trading, isn't it? And as far as that is concerned, poor lows are an excellent thing to use in your trading. Because 70% of the time, they work every time. Don't worry. All of this will be explained in detail in the Mastery of Markets and Minds workshop. Promo code first. Got to sign up before Saturday. Exploring CME says there was a thick liquidity bar at 68.10, which got converted into a big red circle. What does that mean? It means orders actually filled there. So they didn't spoof it. They actually let contracts fill. Yeah. So you're talking about right here. Yeah. So you can see one person got taken out for 234 contracts. Okay. But in general, what does this red circle mean? It means at that moment, there were way more sellers than buyers in there. And that was what they had to do to fill all these contracts. 200 of them were stops, but I imagine a lot more than that got filled there. So the long and the short of it is, it doesn't really mean anything. It just means they didn't pull those. Which, of course, they normally do. Normally, when you see a big red line of liquidity, it will not actually fill. It will get pulled. Man, everything is looking choppy right now, guys. It's so choppy, very choppy. That tells me it's not a bad idea to lock in profits at the poor low. Ticks are choppy. Price action is choppy. The spot gamma looks choppy. And when we're looking at order flow, choppy as hell. Multiple icebergs above us. So I think we're probably in for one more flush, and then that might be it for the day. And we go sideways the rest of the day. Watching them ticks. Steve says, I highly recommend Charles's course. I took it a year ago, and it was one of the best courses I've ever taken. One of? Bro. I'm just kidding. Candle Swinger says, very pickpockety this morning. Oh, yeah. Bart says there's a divergence between ticks and price action. Yes, there is. I mean, they're both bouncing at support. So they're kind of acting in unison, but there's just no follow through on either end right now. Nagesh says, please check the GEX. Why is it increasing at 68.10, 68.25? What does that mean? It means people are buying calls. That's what it means. But I wouldn't say there's anything exciting happening right now with Gamma. It's just saying it's going to go sideways. So let's give it some time, guys. Everybody wants the market to make a huge move instantly. Take it easy. Let them deal with that poor low first. Then we'll find out if we get a bounce. Candle Swinger says fugly price action. Yeah, it's not fugly, you guys. It's just slow. That's all. But it's textbook. What was the first support level? Right here. Okay? We came down to it and we bounced. Both with the ticks and with price. Exactly where we expected to bounce. We came back to it again and we bounced. With the ticks and the price. Exactly where we expected to bounce. You know, it's like, it's not fugly, it's just slow. That's all. But we woke up expecting it to move 1,000,000 miles an hour, and that's why we're disappointed. Tempo will get you. As the old saying goes, if they can't scare you out, they'll wear you out. So before they take the market down, they're going to convince everyone to give up on it going down. They're going to convince everybody, fuck it, this thing's not going any lower. So they exit their shorts, they start entering longs, then it goes down because it can liquidate them. Good thing we see that poor low and we know that's what's happening. Now, where we do have a divergence, a real actual divergence, is in the breadth and the advancers versus decliners in price. The ticks are perfectly working with price, but both the breadth and the advancers versus decliners are actually showing buying. So that's a divergence, but too early to matter right now. All that matters is what happens after we repair this poor low. Do we taper off? Do we find support and turn around and come back up? Or do we get new selling? And if we get new selling, it will change all the data. The options data will change. The internals will change. The, icebergs on Bookmap will disappear. Everything will change if we start to get new selling, because that's the way the market works. It gets new information and people start to change what they're doing, and then the data changes. River Rock says, well, it looks like we closed between 6,800 and 6,850. Again, you guys, you're driving me nuts. You expect things to happen so fast. There is still a chance we're going 100 points to the downside right now. Obviously, it doesn't seem like a high probability, but it is still possible. We get below that A period low, we get new selling, we get another push lower. That squeezes stops. That starts to get people bearish. People start buying puts. All of a sudden, the C period breaks the B period low, and then we just grind lower for the next 2 hours. It is possible. Again, not probable, but possible. So until the market tells you the momentum down is over, just give it time. Malcolm says close is 5 hours away. 5 hours. Yeah. We're less than 1 hour into the day. There's so much that can happen between now and the close. Candle Swinger says FOMC meeting at 2 p.m. That is just the FOMC minutes. So the days where they just release the minutes, it doesn't tend to have as big an effect on the market as when Powell is speaking. That's when the market tends to get the big follow through moves. And also, one thing that Jim Dalton teaches is what he calls the ruling reason for whatever the market is doing. What's going on with the Federal Reserve doesn't matter right now. What's going on with the Strait of Hormuz is what matters. Everybody is obsessed with oil prices because oil prices affect everything else in the economy because of shipping. That's everybody's focus right now. They don't really care about interest rates. They don't really care about that as much. So 2 p.m., we'll get a little flutter of activity, a little bounce, a little sell off. It'll last 5 minutes and then it'll be irrelevant. Okay, so the last 2 times we poked into this area around 68.05, we got a bounce, both in price and in the ticks. So in terms of trying to monitor for continuation lower, in terms of saying, listen, the sellers are in control, they have the intraday momentum for now. Can they keep themselves in control? We need to start seeing these ticks stay below the zero line. Okay, if we get another big bounce in the ticks, then the sellers are going to start to give up. They're not going to be willing to short the next time. So the sellers need to break this low and they need to keep these ticks below the zero if they want to keep the momentum going down. Low is still poor. Poor river. All right, so there's the repair of the poor low. So that was high probability, right? Once we created that poor low in the B period, there was a high probability it would push away and then come back and cross through it. But now that's gone. That poor low no longer matters. That magnet has disappeared. So if this market is going to keep going down, they need to bring in new sellers down here. We want to see the tick stay below zero, and we want to see some volume down here. If the volume just tapers off and the ticks bounce back above zero, then the momentum is over. So this is, again, one of those moments where if you're short, you consider either locking in profits now or moving your stop below your entry, because it's either going to keep going from here or it might be over. So for those of you that are new to Market Profile, maybe this is your first time watching the channel, we have something that we call trending intraday. And essentially what that means is the market is moving in a certain direction. So in this case, we are trending lower, meaning the market is trying to go down. Okay. The way we measure that is, first we have to break out of the initial balance. So the initial balance is simply the first hour's trade. Once you break out of that, you're trending. So in this case, we're trending lower. Well, why do we care? Why do we pay attention to a trend? What does that matter? Well, it is another signal that has high probabilities attached to it that can give us an edge in our trading. So what is that edge? First and foremost, at least for me personally, I never trade against a trend. So if this was still the A or B period, I could technically go long at support and be in a long trade for the bounce. But because we're trending lower, I can only go short. I can't go long. So that would mean I'd want to get short in resistance and then take profits at support rather than try to enter a long at support. That's the first way we have an edge. Okay. The other thing is what we call cessation of the trend. That implies the trend is over. It ceases to exist. And that is if the market gets 2 letters above whatever was the last TPO. So at this point, if the C period gets 2 letters above the B period high, the trend is over. The market is done going down. From there, it is either going to go sideways or go up. These are just what the probabilities tell us. And then when we print the D period, it'll be 2 letters above the C period high, and so on and so forth. So simply put, until we get cessation of the trend, the only way to trade is to sell resistance and take profits at support. Once you get cessation, then you can trade either way. So the follow-up question that you all are having in your mind right now is, well, Charles, what if you get cessation of the trend and it just keeps going down? That can happen too, but it's less frequent. That only happens about 30% of the time. So again, when you're playing probabilities, nothing has a guarantee, but it just gives you better odds of success. When you combine better odds of success with risk management, you have profitable execution. Speaking of which, we are now pushing into the next support. So we're watching for volume tapering off, ticks turning around and heading back up. If we get it, we look for the market to push into resistance. If we don't, we keep going. The sellers are in control of this market. Do the buyers step in and defend, or do we just keep on selling? Just keep on selling. Yeah, they keep on selling. River Rock says, okay, the poor low has been repaired. Now we can go higher. It's possible. But now they got to get cessation of the trend on the way up for me to be willing to go long for it. Crypto Rider says, gamma levels below got stronger and upper got shrunk. Ooh, shrinkage. Ooh. So I'm going to go ahead and zoom back. We'll go back to like 10 a.m. And let's watch this column over here on the right, or sorry, the left. We got, this is where price currently is. So these are our gamma levels above price. These are our gamma levels below. Let's see how they change as I scan forward through time. Here we go. So yes, this one down here around 60, I can't even read it because my thing is covering it up. 66.95 is growing, and the one up there at 68.25 is shrinking. So yeah, but I would also say the one at 67.95 grew as well. So I still read this as sort of sideways, choppy. The hero line is pointing down though. So that shows there is momentum down. But my feeling right now is that the ES is fishing for a low. I don't think we've quite found it yet, but I think it's close. And we'll know because we'll get cessation of the trend. The volume will taper off. The ticks will start to break above zero. And then we get cessation of the trend, and then we know. I'm also focused on the A period low right now, which is 68.04, 68.05, as potential resistance. So remember, what did we say once we broke below there? We want to see the market bring in new volume below there. Well, if you look at the 30-minute volume profile here, where is all the volume? Below that A period low. So right now, within the C period, that A period low is acting as resistance. So that's the first potential level to look for that resistance to hold, which would mean that we're heading down to 67.90. Malcolm says, replay that session. If the market is one time framing, you only have one trading plan. Trade with the trend. Think about this. You've eliminated 50% of your choices before you start. To me, that's a good thing. What I have found with trading is that less is more. The less you have to think about, the better decisions you'll make. So let's say the market is trending lower, but I'm looking at it and I'm getting signals it's not going to keep going down. The volume is tapering off, the ticks are above the zero line, and I'm thinking, this thing is going to reverse and it's going to go up. To me, that's not a reason to go long. It's a reason to avoid the short. Why does that matter? Because if I'm looking for a long, I might be convinced I should get long, and then the market just keeps going down. It crashes right through. Because in that moment, it may look like the market's going to reverse, but the market hasn't told us it's going to reverse yet. That's cessation of the trend. So it eliminates 50% of the decisions that you have to make, which decreases confirmation bias, right? It increases the odds that of the decisions you make, you'll make correct ones more likely. That's a weird sentence I just put together there, but you know what I mean. Less is more. As he says, discipline equals freedom. Seth says, Gamma is going to change with spot? Yes, sir. So that's the ultimate dilemma with everything that we look at in market-generated information is the information might be telling you something right now at this moment. It's saying the market is most likely to do X, Y, or Z. But then something changes in the market, and then all of a sudden the information isn't telling you that anymore. Now it's saying something totally different. And so you go, all right, well, what's the perfect information to look at? And the answer is there isn't. You can look at fundamentals. You can look at options data. You can look at price action. You can look at order flow. You can look at whatever you want to look at. But it's all going to be random and it's all going to change in a moment's notice. So what you really want to work on is the skill of being able to stay in the flow of the market. Go with whatever the market is telling you right now at this moment. And then when that changes, you change your mind. Sometimes that means you're going to get stopped out of trades and you can't let that affect you. That's the part people struggle with. Exploring CME says the value area high, value area low keeps changing as we progress through the day. Is there any way to find out what was the value area high and low for each TPO, ABC? I would say it doesn't really matter. So what is the value area? What is that? That is basically just a way to measure where roughly 70% of the day's trade has been. Okay. So you don't want that to be a signal that's constantly changing every 30 minutes. You want that to be something where it's giving you more reliable types of data. So the value area is constantly changing throughout the day, but it changes very slowly. I hope that makes sense. Willie T says that oil is rising again. I mean, it makes sense. That was a massive fall based on a 2-week reprieve. Like, this is what I was thinking about when I was looking at oil this morning. I was like, a lot of refineries and stuff like that, or they're not called refineries, whatever it's called where they pump it out of the ground. A lot of those shut down in the Middle East because they had nowhere to send the oil. And they can't have the pipes full of oil, it backs up the pressure. So they had nowhere to send it. So they just shut down the drilling altogether. Those are not going to boot back up right now for a 2-week period. So those are going to stay closed. So yes, there should be a little bit of supply that comes into the market, making oil cheaper because now all those ships that are full of oil can pass through the strait. And so the oil can get to where it's going, but it's only going to last 2 weeks. So ultimately, should that really cause, a 10% change in the price or whatever it was? Yeah, 15% change in the price? No, it really shouldn't. So yeah, it would make sense to me that oil kind of bounces back up and gets above this trend line by the end of the day today. This was all just momentum. It was just computer programs recognizing that suddenly the liquidity had changed in the oil market, and it was just bots joining the party to the downside. Okay. So we just tested that A period low and we did get resistance. Look at the ticks. They got smacked down. So that's a sign we're heading down to the next support, 67.90. And once again, we ask the question, will it bounce or not? Sheena says, so you have to get ticked off. I don't know what I said, but that's a great phrase. That's the way I think about trading every day. Is it's almost like I've got a list of things the market has to do if it's going to go down. Thing number one, it's got to get below the opening price. Thing number two, it's got to get new selling. Thing number three, it's got to repair the poor low. Thing number four, it's got to start one time framing. Thing number five, we got to get the ticks below the zero line and to stay there. And as you start checking those off, one signal after another signal after another signal, the more of them that you check off, the more confident you are that the market is going to move down. But if you rewind back to about 2 minutes into the day, you'll hear me while price was up here talking about the longer you wait, the more confident you can be that the market is going to go down, but the less potential reward and the more potential risk. So a couple minutes ago, we saw that A period low become resistance, right? You could have shorted there. But at that point in time, your reward is 15 points away and your risk is a little more, 17 points away. So you're actually risking more to get into the trade than your potential profits. So that's not a good entry, right? The good entry was up here where the risk was only a couple of points with the potential being hundreds of points for all we know. You know what I mean? So this is the hard part of trading. You wait till you check off all the boxes you want to check off to be confident, and you're probably getting a shitty entry. So you got to balance the two, Wait to be, confident that you know where the market's going to go, but don't wait too long. Jim Dalton says you only got to be 60% sure. If you're 60% sure, that's good enough to enter a trade. Malcolm says, if you have one trading plan, you reduce the potential of getting chopped up. These are lessons we will learn if you invest. These are lessons you will learn if you invest in the Pirates course. MasteryOfMarketsInMind.com. Now, here's the bad news for anybody that's thinking about signing up for the course. I will never in the course say this is going to make trading easy. I will never say this is going to guarantee you success. What I will give you is a game plan that will give you success if you're willing to work really, really hard. If you can have self-discipline, and that's the catch. Like being an athlete in a sporting event, you can prepare all you want to prepare. But the bottom line is, when that whistle blows and that game starts, you got to handle whatever random thing happens properly. That's discipline, right? Seth says, that's why I prefer to use raw market maker positions as opposed to gammas. Well, what we're looking at is the gamma for the market makers. So it's split out. You can see just market makers. or you can see the customers, the pro customers, the broker dealers, or the firms. So you can see how every single different participant in the option market, how they are positioned. River Rock says, is there a poor low at 67.97? No, that would have been repaired when we were below it. So let's say hypothetically this day was a poor low right here. When we crossed through it the next day, that low was repaired. So any poor lows would have been repaired a long time ago. The only poor lows that matter now are the ones down here, which have not been repaired yet. And I actually don't think we have any. We'll check on that in a second. I just want to watch for this support here at 67.90, and then we'll zoom out and take a look. Pat says, what is a TPO? There's the question we're looking for. Thank you, Pat. What is a TPO? Well, it stands for time, price, opportunity. Do not ask me why they call it that. That's just what Stoudemire decided to call it, the guy who invented market profile. But it is the letters that you see. So right here, this section right here, that's a TPO chart. And this section right here, that's a TPO chart. And these are identical. These are both the intraday charts. So from the market open till now, these are the TPOs. The difference between the two is the one on the left is collapsed. So it looks like this, where all the letters are smushed on top of each other. You can't really tell because it's so early on in the morning, but that'll become more relevant later on in the day. And this one, it's expanded out so that you can see each 30 minutes on its own. So it kind of like turns these almost into candlesticks so that you can see it as a candlestick and as a profile at the same time. And what they basically are is like 30-minute candles. So each letter represents 30 minutes. The A period is 9:30 to 10. The B period is 10 to 10:30. The C period is 10:30 to 11, so on and so forth. Crypto says the easiest TPO is the 30-minute interval. Yeah, so you can set your TPOs to any time frame you want. You could have a different level every minute, every 5 minutes, every 30 minutes, every hour, whatever you want. 30 minutes seems to be the sweet spot, especially if you're trading the ES. It's like it gives you enough data to recognize the big changes that happen, but it doesn't overwhelm you with a bunch of irrelevant data. If you, for example, used 5-minute TPOs, you would start trending and then you get cessation, then you start trending again, and then you get balance, then you start trending, and then you get cessation. You just be like getting all these mixed signals over and over and over again. So 30-minute kind of slows it down enough that you can trust as long as you're still trending, you're likely to keep going. But if you had hourly TPOs, you might not find out the trend is over until 30 or 40 minutes after it's actually over. So 30 minutes seems to be that sort of sweet spot. Okay, so here's our next potential support. And we're going to ask the same question we asked on the last one. Does the volume taper off? Do the ticks bounce? Or, like last time, do we get new selling down here? Do we start to bring in volume? And do the ticks stay below the zero? If they do, We're heading down to the next support, which it looks like we may liquidate into, which is 67.78. Yep, we're going to liquidate into it. All right, so I know I'm throwing a lot at you guys, especially if you're new, but I'm just trying to give you the most education I can give you here, while this stream is going. So this that's happening right this second, this very fast drop that we just had from basically 93 down to 81, that is what we call a liquidation break. It just basically means you're taking out a bunch of stops. That's what it means. You're liquidating buyers. That's why it's falling so fast. And a liquidation break is a unique thing. It is separate from anything else. So the move from the opening price down to here was a slow grind, right? We had to keep convincing more people to go short and more people to go short and more people to go short to get here. But the move from here to here happening very fast, that's a liquidation. So often that's when you end up making a low, is when the market liquidates, because you're basically taking out all the stops and then you turn around and start going the other way. And the way we think about this is wherever that liquidation started, which was around 94, okay, 93, 94 area. If you liquidate, you come back up to where it started, one of two things is going to happen. And it's actually while we're talking right now, either you get new sellers, that becomes resistance, not necessarily exactly to a tick that level, but generally the market just starts to bring in sellers there. So we would start seeing the ticks going down, in which case it's going to keep going down, or you don't bring in sellers. And if you get a liquidation break and you don't bring in new sellers, that often completely reverses the market. So there is a potential we just made the low for the day. And all that's going to matter is, do we get new sellers right now or not? Get new sellers, this thing's going to keep going down. Not, we may have just made the low of the day. Okay, watching those ticks. Do they get smacked down here? Do the sellers start to step in? Okay, so now that we've printed the D period, the next TPO, what is our signal the momentum is over? Cessation of the trend has now moved to 2 letters above the C period high. So if you got short anywhere inside the B period, you would want your stop up here now. You would want, move your stop down. Because if we come back up through 68.11, that means the momentum to the downside is over. We also created what is called a set of single prints. So the area between where the D and C is down here, and there's 2 letters, and the A, B, and C is up here where there's 2 letters. The area between where there's just 1 letter, that's called single prints. Like a poor reference, that means there's now a magnet at that first single print, increasing the odds the market will come back and backfill it. However, that also has odds of becoming resistance. So in the same way that the poor low tells you it's going to push away and then come back, the single prints tell you it's going to come back and then push away. Okay, so we've been talking about this idea of, the odds of a trade working and wanting to get into it at the best possible risk reward. Right now, this is totally different than it was earlier in the day when we were talking about getting short below the opening price with a stop above it. So right now, if we come back and backfill these single prints, we have very little risk, right? We only have to take on, 5 points of risk to get into that trade, to get short there. But the odds of it working now are much, much less. Why? Because of that liquidation. Because we got a liquidation and we did not get new selling. So now odds actually favor that we made the low of the day. So can you short the base of the single prints? Can you short 6804? Yes, absolutely. It's just the probability of it working is less than earlier on in the day. So it's still good in terms of risk reward, right? Still a good trade, but it just probably won't work, or it doesn't have as good of chances of working. And that's the thing about momentum. When you're trading momentum, you have to get into the trade as quickly as possible and wait as long as you can to take profits. Whereas when the market is in balance and it's going sideways, you want to wait as long as you can to get in near the edges of the range and then lock in profits quickly. This is another thing we teach in the workshop. Every trade is not the same. Trading momentum is one thing. Trading balance is another. Momentum, you want to get in as quick as you can and stay in as long as you can. Balance, you want to have the best entry you can and lock in profits quick. So I can say with confidence, it is now or never for these sellers. They backfilled those single prints. They're just a couple of points away from cessation of the trend. If they want this market to keep going down today, they need it to go down right now. And I give them 60% odds that we get continuation lower, 40% odds we get cessation of the trend. So it is definitely still higher odds. It's going to go down, but less so than it was earlier on in the day. And you say to me, Charles, this is too much information. You're telling me this, and then you're telling me that, and you're telling me this. That's what I talked about when I said the way to trade and actually get consistent results, you have to constantly be changing with the new information. New information, new information, new information, new information. Right? If you can adjust and keep up with these changes, each new thing that happens, the market's got a poor low. We got to repair the poor low. We're one time framing. Can we keep one time framing? We got a liquidation break. Do we get new selling? We got a set of single prints. Do they hold as resistance? If you can keep up with the changing information minute by minute throughout the day, you will be right more than you will be wrong. And I can teach you all of that in the Mastery of Markets and Minds workshop. marketsandmind.com. It truly is the last trading course you'll ever need. Once you're done, you won't instantly be a profitable trader, but you will have all the tools that you need to be a profitable trader. And from that point on, it'll just be about you and your screen time. Speaking of screen time, let's take a look at the gamma levels here. So this still looks very balanced to me. But if we keep one time framing, we now have a seek and destroy level at 66.95, which is, roughly 70 points, a little less than 70 points below us. So that's potential for this thing to keep going if we don't get cessation of the trend. If we can keep this momentum going. Malcolm says hero is a hockey stick on the ice, building out the blade. That's an interesting analogy. I don't know, man. Kind of looks like it's trending lower. I mean, you could be right. We could be starting to build a blade here, but yeah, the gamma keeps growing below price, shrinking above. So people are buying more and more puts. Okay, so somebody asked earlier about poor lows. So right now, the only weak references that matter are going to be all the way down here inside, yesterday's range and below. And the only poor low I see is from the 30th. There's that poor low. But that's why I say this whole area that's dark in here, it is dark for a reason. That's the market telling us something. It's telling us there are no magnets here, right? It doesn't have to come back down to these levels. It can, obviously, if you have momentum, it can go all the way to a gap fill, but it doesn't have to. That's what the weak references do, is they tell you the probability of the market coming there is higher. And because we had this massive gap up today, we just took away the probabilities of needing to come down. Doesn't mean we can't, right? Just means we don't have as strong a magnet. Right now, the only magnet that's really pulling on price is the gap itself, the gap fill. And because it's such a large gap, I just don't think we're going to get there today. So, as I said, the only way we can look for where's the market likely to go next is if a resistance level holds, it's going to go to the next support. Okay? How do we know where those are? We look for those large cumulative volume nodes, those little fat areas that stick out. So now that we're way zoomed out, let's pretend we weren't watching the market move minute by minute by minute today, right? Let's pretend that we were just a swing trader kind of glancing at things. What has the market done so far today? It very quickly moved from this large node to this one. Then we spent some time chopping around. Then it very quickly moved from that large node to that one. Now we're spending some time chopping around. As we get momentum lower, where do you think the next move is going to be? From that one to that one. Okay? So sometimes when we're all zoomed in and we're watching every little move every single minute, we lose sight of the bigger picture, which is ultimately we're probably going to move from one large cumulative node to the next. Again, as long as we can keep the momentum going, as long as we don't get cessation first. That's probably where we're going, which is 67.70. I don't think we have to go any further than that because we don't have a bunch of weak references here that need to be repaired. In the same way that pushing up into this node was what created the resistance in the overnight that made us run out of steam on the way up, pushing into this node will probably be the support that holds us up intraday. But let's just take it one tick at a time. Let's zoom back in. We're day traders. We don't have to know where the market's going to be hours from now. We just want to know where it's going next. Moraine says, how do you use Gamma and Bookmap? It looks like both are just side tools. Yes, it's all side tools. So the main thing I use to understand the market is the market profile. That's the screen over here on the left. This is where I get like 90% of my read of the market. It's just price action. Where does the market go? How much time does it spend there? How much volume does it bring in? That's the most important information. And then I use Bookmap, which is order flow, to see the way orders are being added and pulled from the order books, to see where stops are. And I use market internals, which is a way to see what's happening with the actual underlying shares. So obviously on market profile, I'm looking at the futures contracts. The internals are showing me the stocks, what's happening with the actual stocks that are represented by the S&P 500. And then the Gamma gives me the view of options market makers, which, because the way options market makers operate, they remain delta neutral. Changes in the market kind of come with high probability follow through based on market makers. But all of that is just secondary to price action. Price action is the purest information. It is the most reliable. And so that's my main focus. Go over this in more detail in the workshop. Mastery of Markets in Mind. marketsinmind.com. Can anyone in the chat tell me what I'm observing right now, which is less bearish to see? Bart says buyers. Yeah, yes, but I meant, how do I know they're buyers? What am I visually seeing that's telling me buyers? That's one. Ticks above zero line. What else? Volume. Thank you, Malcolm. Look at the volume profile on the 30-minute volume profile right here. What is happening? We're tapering off at the low. Okay. So I see that we've got volume. I mean, we got red candles here, but we're tapering off. So I'm looking at the ticks to be like, are buyers stepping in right now? And they are. Okay, because the ticks are staying above zero. So does that mean I want to exit a short? No. Of course not. We're still trending lower. The higher probability is still that the market is going to go down. But if I did short the base of the C period single prints earlier, if I did get short there, this might be a moment that I would say, let's take that risk off the table, right? Not because the market is definitely going to reverse and come up, but just because it's starting to give us signals that it might want to. So I don't want to exit the short. I'm not going to, get out at, market right now, but I would definitely take some risk off the table. If I'd have shorted the base of those single prints down. Exploring CME says, what about negative delta? If the node has negative delta, how do we read that? Honestly, I don't pay a lot of attention to it. If you look at this column on the right here, that's showing you the delta between buyers and sellers. But it's only really relevant if you're watching it like tick by tick as the market moves. So I don't even pay attention to that. It just it changes so fast. You got buyers, you got sellers, you got buyers, you got sellers, you got buyers, you got sellers, you know? And so it's changing so quickly, my brain can't keep up. So I think about it in a much slower way, which is just where does it taper off? And then what's happening with the ticks at that moment, the tick chart. So you could use delta if you could think as fast as a computer. Malcolm says, Hero is on the ice. Maybe. I think I would join your party if we made a higher high. So if it got above, what is that like? Negative 800 billion. Yeah, something like that. If it started to make a higher high, then I'd say, okay, you got your hockey stick moment. But I still think that's momentum down for now. If you guys have not yet, please smash that thumbs up button. I feel like I've shared a lot of knowledge today. I feel like I've earned a little thumb. A little thummy action. And not the kind of thummy action you're thinking of right now, you dirty, dirty people. I'm talking about the like button. Ooh, ooh, ooh. Marine says, I think we are reversing. So again, I could make the argument that we're reversing, but I could also make the argument that we're still trending lower, right? I could give you, like, if we could go signal by signal, I could give you as many signals to say the low is in and we're about to reverse and go up as I could that the resistance is going to hold and we're going to keep going down, right? There's both sides of the argument. So just looking at the, this Bookmap over here, what was this? We talked about it at the time. What was this right here? That was a liquidation break. Okay. And we talked about how that could be the low of the day, which would be a reason to say we're going to reverse. But we ended up getting new selling and continuing the momentum. We did not get cessation of the trend. That's a reason to say we're going to keep going down. You know what I mean? We got back to the base of the single prints that held as resistance. That's a reason to think we're going to keep going down. But we also created a weak reference, which is a reason to think we're going to come back up. We also left behind an iceberg, which is a reason to think we're going to come back up, but that we might then find resistance and turn around and come back down. So there's a lot of signals pointing both ways right now. And this is why we discussed the idea that, like, I don't want to get analysis paralysis. I don't want to start thinking about too much. So for me at this moment, the easiest way to think about this is if I'm in a short from the base of those single prints, my stop is a tick below my entry. If I get stopped out, that's okay. I can either re-enter or I can just give up on the short. And that I'm not even going to think about is the market going up until we get cessation of the trend. And it might happen as soon as we print the E period in about 3 minutes. But until we do, there's a 50-50 chance we print that E period and we just keep going down. So stay bearish as long as we keep trending lower. It's the better way to trade. But I do agree with you that the momentum feels like it's over, right? Tempo is slowed. We've tapered off volume at the lows. The ticks are holding above the zero line. So it certainly does feel like the momentum is over. But until I get the actual signal, until the market actually tells me, Charles, the momentum is definitely over, I want to stay bearish in my mindset. So I'm still shorting. I'm just being cautious about that. There's a question here. What do you call cessation of the trend? So like I said, that's when the current TPO, the current letter, gets 2 letters above the previous one. So if it were to happen in the next 2 minutes, the D period would have to get up to 68.1150. If it were to happen in the C period, the market would have to get up to 68.08. So until it does, the actual higher probability is that it's going to keep going down. It might go down very slow. It might slowly grind down, but it is still more likely to go down until cessation of the trend. Okay, so now that we've printed the E period, the market is giving us multiple signals. First off, the D stayed inside the C. That's a sign that the momentum is running out. Okay? That's what we call tempo change. Things have slowed down. We're not moving as fast as we were earlier. So that's a sign that the momentum might be running out soon. But the E is still below the D high. So we are still trending. If the market gets above that D high, then we know it's over. And we do have that iceberg up there. Yeah, looking at the options data here, it feels like the market writ large is as, uncertain and mixed opinioned as we are, right? Some of us thinking the low is in and we're going to reverse. Some of us thinking this thing can just keep going to the downside. People are going long and short in the options market right now. They're buying puts and calls. So this is going to be about breaking one side or the other. You get cessation of the trend, you squeeze all the sellers, and then you start to move back up through the opening price, maybe even up to the overnight high. You trend lower, you go down and you break the C period low and you squeeze all the buyers, and then you get another liquidation. So this is tug of war, and whichever side is going to win is going to win. We don't know. But we do know what will come next, depending on who wins. Short covering or liquidation. All right, so this is that moment of truth for the sellers. It would not be unusual for the market to come to 68.05 because we have that iceberg there that wants to get filled, but they literally have to hold it right there. If you wanted to get short at 68.05, you could do so risking 1.5 points to get into a trade with cessation as your stop. Now, the odds of that trade working are not great because the liquidation, because the taper in volume, because the reversal in the ticks, because the slowing of the tempo, right? For all those reasons, the higher probability is that we're going to get cessation right now. But if you wanted to take a trade where you only got to risk a couple points, this would be your chance. And like I said, if it doesn't work and you get stopped out of a short, you know the market's probably heading all the way back up to the opening price. So there'll be an opportunity to make it back. This is that moment right now. The sellers smack it down right here, right now, or it's over. You could be in with a point of risk. Exploring CME, thank you, sir. He says, excited for the workshop. Can we ask questions via Zoom voice during the workshop, or will there be a chat format only? Not only can you ask questions via voice, I prefer it. Very few people do it. Most people just type out their questions, but I love it when people jump on the mic and we have a one-on-one conversation. It's a much easier way for me to understand the tone of the things that you're saying. Which just makes it easier to communicate, you know? So yeah, I would love voice. Maureen says, I think we are pinned between 67.80 and 68.30. I think if we get cessation of the trend right now, we're probably going to the overnight high before the end of the day. I know that seems very confusing because I've been so bearish up till now. Okay, so there's cessation of the trend. So now we know the low of the day is probably in. That liquidation that we got earlier on in the day, where the market just dropped super fast. Let me get to the chart here. Okay. We talked about this live when it happened. Whenever you get a liquidation like this, where the market just drops super fast and takes out a large number of stops, that can often become the low of the day, but you don't know. And so the thing you look for is, do you get new selling where it started? If you get the new selling, then it keeps going. If you don't, then that's probably the low of the day. Well, we now know that's the low of the day. Okay. Does that mean we can't break lower later on the day? Of course not, right? Nothing has 100% certainty, but that significantly increases the odds that this is going to be the low for the day. Okay. The fact that we got cessation of the trend just now confirms that. It's saying, yep, that's it. The sellers got it as far as they could get it, and then they ran out of sellers. So normally right now we'd be saying, okay, the market is going to go sideways. Basically exactly what you just said. The market is pinned. We're going to go sideways. But there's one thing today that I have been very annoyed by all day that has been driving me nuts because it makes zero sense. And that is this right here. All morning long, the advancers versus decliners have been pegged up here at positive 1900. That is an extremely bullish signal, which has been frustrating the shit out of my brain this morning of how is it that we have a trend down and we have all this momentum down, but yet we're actually seeing a lot of strength in the breadth. I'm sorry, in the advancers versus decliners. The breadth too, actually. That's a very tricky, contradicting signal. So what that has me believing right now is that while the futures have been selling off, buyers have been accumulating stocks. They've been buying the dips in the stocks. So yes, I think the market is rotational. Yes, I think we're going to spend some time going sideways in here, but I actually think later on in the day, we're going to break higher and probably close up here around 58.50 is what I'm now thinking. That by the end of the day, we'll be up there above that overnight high because somebody is buying up stocks here. Okay. Like crazy. And so if they don't take profits, which they might, they might push up here near the opening price and they start taking profits and then we just go sideways the rest of the day. But if they don't take profits, then this thing will just keep going up. It won't get resistance up here and come back down. And whatever buyers have been buying these stocks today, they are diamond hands because we had this massive gap down. We had momentum down. We had every reason in the world for people to be like, fuck this, I'm not going to buy the dip. And they still kept buying. So for now, for the moment, rotation, sideways, pinned, just what you said. Probably until 2 o'clock. Then the FOMC minutes drop, right? At 2 o'clock, the market will react to those minutes. Like I said, it probably lasts about 5 minutes of up and down and up and down and up and down, right? Like crazy. But I actually think it's going to break higher once the FOMC minutes are done. Once that uncertainty is taken out of the market, I bet you we get a spike up at the end of the day. So from here on out, for me, there's really no trade. I don't want to short up here as I normally would once the market is rotational, because this is just giving me signals of like, So I would say for now, there's really nothing for me to do between now and 2 o'clock, and then wait to see the reaction to the FOMC. With that, I will say goodbye. Thank you guys so much for hanging out today. It was a good one. Lots of great questions, lots of great interactions. If you have not hit that thumbs up button, again, if you don't hit it, I won't come and do another live stream publicly. So if you want more of these, you got to smash that thumbs up button. Thank you guys very, very much. If you are a member of the brigade, I will see you tomorrow morning in the live stream. And one last time, I just want to plug my workshop. Again, the reason I'm plugging it so hard today is because you can get it for the cheapest you can possibly get it. You sign up now and you use the promo code FIRST, F-R-I-S-T, and you're going to get it cheaper than you ever can. So you really want to sign up this week. Good luck, everyone. Happy trading, and we'll see you tomorrow morning.